Hello and welcome. Are you a business owner or entrepreneur and grappling with ever changing GST regulations? If so, you're not alone because since GST was introduced, every now and then we keep getting exposed to new terms or concepts, which in a way is good because we get to learn new things. And one such phrase that we nowadays often come across in many press releases, circulars, and so on goes like this: regularized on as is, where is basis. Believe me, this phrase, as simple as it may seem, has brought both relief and confusion to the business community. Because what does it mean by as is, where is? Different views are possible, right? So, to put an end to this confusion, on 11th October, CBIC has released a circular clarifying the scope of this phrase. So in today's video, we'll unravel the mystery of this phrase as is, where is, and how it can impact your GST compliance. This video is also going to be useful for consumers interested to have a basic understanding of this concept. First, let's understand the meaning. If you Google, in the context of an item being sold, it's the current condition with all faults and defects, whether or not immediately apparent. And in GST, as per the circular, it essentially means that the payment made at lower rate or exemption claimed by the taxpayer shall be accepted and no refund shall be made if tax has been paid at the higher rate. Why no refund? We'll talk about this in the end. Now coming back to the circular, this short payment or exemption can be because of diverse interpretations, say about GST rate, classification, and so on. To have a better understanding of this, let's consider a scenario. Imagine you want to visit Kedarnath temple in Uttarakhand. So you're planning to book for helicopter services. There are two suppliers, A and B. Both offer passenger transportation service by helicopter. Both charge 10K per trip plus GST. While A charges 5% GST, so you would pay 10.5K. B charges 18% GST, so you would end up paying 11.8K. Which one would you choose? Of course, A. This is the clear example of diverse interpretation of rate of GST. But why are these suppliers charging different GST rates for the same service? That's because both these suppliers have taken different tax position. That is, one thinks 5% is correct while the other thinks 18% to be the correct rate of GST. To put an end to this diverse interpretation in the context of helicopter services, CBIC had to come up with a notification to clarify. So from 10th October 2024 onwards, 5% GST would be applicable if you avail helicopter service on seat share basis. Charter of helicopter would continue to attract 18% GST. And if you observe the press release, it states that regularize the GST for past period on as is, where is basis. Now the past period here is before 10th October 2024. Let's consider this notification and press release in the context of helicopter services to understand the topic of today's video, that is the phrase as is, where is. For this, let's consider the same example but this time from supplier's perspective. Let's say there are two customers X and Y who avail services from supplier A and B respectively. For ease of understanding, let's say both these customers have booked helicopter service on 20th August and both the suppliers have issued invoice on the same date. These are past period transactions because these have happened before 10th October. Let's also assume that these suppliers have paid GST on 18 September, that is at the time of filing their GST R3B. So supplier A has paid GST of rupees 500 and B rupees 1800, assuming there are no other transactions. Now let's see how this phrase as is, where is going to impact GST payments that these suppliers have made, starting with supplier A. Supplier A has paid GST rupees 500 to be paid rupees 500 because that's the correct rate of GST. So there is no difference, no financial impact. Coming to B, GST paid 1800 to be paid 500. Difference 1300 is the excess payment. B can't get refund, so this is going to be a loss. So financial impact is 1300. Apart from these, two other interpretations are also possible. To understand this, let's add suppliers C and D to our example. Supplier C has paid GST 0, assuming it to be an exempt transaction being a religious pilgrimage. If C declares this as an exempt supply in GST returns, then C is not required to pay GST at 5%. So GST to pay would also be 0, no financial impact even for C. Now D, GST paid 0. But the reason this time is D is not sure what is the correct rate of GST. So D has not declared this as an exempt supply. In this situation, D is required to pay GST at 5%. So GST to pay 500. So financial impact for D is 500 plus interest as applicable. Let's now summarize what we have understood so far. 1. Suppliers who charge correct rate. From our example A, there is no financial impact, which is fair. 2. Suppliers who declare the transaction as an exempt supply on the basis of some notification or other legal provisions don't end up paying GST. From our example C, this is also acceptable. 3. Suppliers who don't pay GST when actually required to pay. From our example D, there's no concession and such suppliers are made to pay GST. This is also fair. But suppliers who pay excess GST end up losing money because there is no refund. From our example B, is this fair? Why no refund? As per the circular, the intention is to accept transactions on the basis of tax position taken by taxpayers. That is, if you think 5% GST is applicable, then you have to pay 5% GST. But if someone else thinks 18% is applicable, then that person is made to pay 18% GST, so there's no refund. Another important thing that you need to remember is this tax position that you take or the exemption that you claim, it should reflect in the GST returns that you file. Now coming back to the question, why no refund? Does it mean to say that the GST Council is hinting taxpayers to choose lower rate wherever diverse interpretations are possible? I'm not sure. What do you think? This was all about as is where is. Hope it was informative. Thank you for watching.